What if the single greatest secret to picking winning stocks for the next decade isn't hidden in some obscure Wall Street report, but is instead being broadcast to the world by the one man everyone thinks is only talking about Bitcoin? You hear the name Michael Saylor, and you immediately think of one thing: a relentless all in bet on Bitcoin. His company, once a quiet software firm, has transformed itself, now holding around 158,400 Bitcoin as of November 2025. That's a strategy so bold, so audacious, it's been called everything from genius to madness. But while the world has been laser focused on what he's buying, they've been missing the revolutionary blueprint hidden in plain sight. They've missed the why. Saylor isn't just a Bitcoin bull, he's a first principles thinker who believes he's diagnosed a fundamental disease in our financial system and has engineered a cure. He sees fiat currency not as money, but as a melting ice cube. He views most traditional assets as toxic. His philosophy, built on scarcity, leverage, and long term vision, is far bigger than a single asset. It's a total reimagining of how value is created and preserved in a world of seemingly infinite money printing. It's a framework that, once you understand it, can be reverse engineered and applied not just to digital assets, but to the stock market itself. What if I told you that the world's most famous Bitcoin bull isn't just giving you a crypto playbook? He's giving you a blueprint for identifying the next generation of super stocks, the companies that will dominate from 2025 to 2035. For the past 5 years, investors have been chasing the last decade's winners, piling into the same handful of tech giants. But the game is changing. The easy money era is over, and a new paradigm is upon us. In this new world, the old rules of investing won't just fail you, they could lead you to ruin. In this video, we're going to do something no one else is. We're going to ignore the noise of Bitcoin's daily price and instead decode Michael Saylor's core principles. Then we'll apply that powerful four-part framework directly to the stock market to build a blueprint for the next 10 years of wealth creation. This isn't about buying crypto stocks. This is about using a crypto-inspired philosophy to find the world's most dominant, unassailable, and explosive companies. We're hunting for the next true titans of industry, hiding in plain sight. And the criteria for finding them will change the way you look at a balance sheet forever. To understand the solution, you first have to feel the problem. And Michael Saylor's entire worldview is built on a single terrifying premise. The traditional financial system is designed to systematically drain your wealth. The very dollar in your bank account is not a stable store of value, it's a liability. Saylor describes cash and anything like it as toxic. Why? Because in his view, central banks are programmed to expand the money supply, not by a little, but by a lot. To illustrate this, he's used figures like a 15% annual expansion of the money supply as a kind of hidden tax on anyone holding cash. Just think about that. If your wealth is sitting in cash, you're not standing still. You're on a downward escalator, losing a huge chunk of your purchasing power every single year before you even make an investment. This creates what he calls a negative real yield. It's a hurdle that every single investment you make must clear just to break even. If we use his number as a mental model, that savings account paying 2%, you're actually losing 13%. Those government bonds yielding 5%, you're still losing 10%. Your stock index fund that returns 8% in an average year, you're down 7%. You are working harder and harder, yet the finish line keeps moving further away. This is the great challenge for the modern investor. It's a war against an enemy you can't see: monetary debasement. Saylor argues this has triggered a stampede of capital out of cash. But where does it go? Well, the first stop was stocks, but Saylor points out a critical flaw here. That same high rate of monetary inflation acts as a crippling discount rate on a company's future earnings. For a normal stock to generate a real return, it has to grow its earnings faster than that inflation rate. How many companies can realistically grow at 20% a year for a decade? A tiny fraction. And those are usually incredibly risky bets that can implode at any moment. The other 95% are just being slowly consumed by the same monetary fire you're trying to escape. The second stampede was into real estate. But in a world of low growth and high inflation, Saylor sees most real estate as little more than a bond with extra steps. You have high carrying costs, no liquidity, and if you can't raise rents faster than the true rate of inflation, you are, once again, losing. So the problem is this: the safe assets aren't safe anymore. The currency is melting. The traditional havens are failing. The whole system is leaking energy. An investor today is like someone trying to build a castle on quicksand. You can have the best design and the best materials, but the ground beneath you is giving way. This isn't just some theory, it's the reality for millions of people who see their grocery bills rising, their savings shrinking, and their dreams of financial freedom slipping away. The old playbook, a 60-40 portfolio, buy and hold an index fund, save in cash, is broken. It was built for a different monetary world. To survive, let alone thrive, in the next decade requires a new playbook. It requires you to stop thinking about making money and start thinking about preserving value. And that's where Michael Saylor's radical philosophy begins. Faced with a system he saw as terminally ill, Saylor didn't just look for a better investment. He went back to first principles. He asked, what is money? What is value? What properties must an asset have to survive for a century, not just a quarter? He basically created a new physics for finance built on four unbreakable pillars. This is the core of his blueprint. This is the absolute cornerstone of the whole philosophy. In a world where money can be printed to infinity, the only rational response is to convert that collapsing paper into something that is provably absolutely finite. For Saylor, the ultimate expression of this is Bitcoin, with its mathematically enforced cap of 21 million coins. He doesn't see it as a tech stock or a speculative token. He sees it as the birth of a perfect monetary asset. Digital gold, but better. Why? Because it has a set of properties that have never existed in one asset before. He often talks about assets needing to be scarce, desirable, portable, durable, and easy to maintain. Gold is scarce, but it's a pain to move and verify. Real estate is desirable, but you can't move it, and the upkeep is expensive. A stock is a claim on a company, but that company can always issue more shares, diluting your ownership. Bitcoin, in his framework, is the first asset to nail all of these qualities. It's absolutely scarce. It's globally desirable. It's perfectly portable. You can move $1 billion with a string of text. It's infinitely durable, and it's low maintenance. Saylor's strategy at MicroStrategy was the first real-world test of this theory at scale. He took his company's treasury, that melting ice cube of cash, and started converting it into this superior asset. His goal wasn't to make a profit in dollars. It was to upgrade his treasury from a weak, debasing asset to a strong, appreciating one. This is a huge mental shift. He stopped playing the game of chasing dollar returns and started playing the game of accumulating the highest quality asset. The key takeaway isn't buy Bitcoin. The takeaway is to train your mind to see the world through the lens of scarcity. In an age of infinite copies, true scarcity is one of the most valuable things in the universe. The first step of the Saylor Blueprint is to find it. Pillar 2. Leverage the asset for low-cost capital. This is where Saylor's strategy went from novel to revolutionary, and it's the part most people get wrong. Once MicroStrategy had a huge position in what it saw as a pristine asset, it didn't just sit there. It used that asset as a foundation to acquire more of it. MicroStrategy began issuing convertible notes and other forms of debt, sometimes at incredibly low interest rates, other times at higher ones, and using the proceeds to buy more Bitcoin. To the outside world, this looked like a wildly risky, leveraged bet. But from Saylor's perspective, it was the most logical move in the world. Think of it this way. He was borrowing a weak, debasing currency, dollars, at a known cost to acquire what he believes is a strong, appreciating, scarce asset, Bitcoin. As long as the long-term appreciation of Bitcoin outpaces the interest on the debt, the strategy is a massive win for shareholders. It's a form of financial arbitrage between the old system and the new. He has argued that his capital structure is robust enough to withstand huge drawdowns, even a 90% drop in Bitcoin's price for years. This isn't reckless gambling, it's a calculated long-term strategy built on the conviction that he owns the superior asset. The asset itself becomes the company's financial superpower, providing a source of strength that no competitor can match. The second pillar of the blueprint, then, isn't just to acquire a scarce asset, but to use the strength of that asset to your advantage. It's recognizing that a powerful core asset isn't something to be held passively. It's a tool to be used for strategic growth. True masters don't just own their fortress, they use it as a base to expand their empire. Pillar 3, adopt an extremely long time horizon, 10 plus years. In a world obsessed with quarterly earnings and 24-hour news cycles, Saylor operates on a different time scale. He isn't thinking about 2025, he's thinking about 2035. He's made bold predictions, forecasting Bitcoin could reach $1 million per coin by 2035, believing a massive digital gold rush is still in its early innings. This long-term vision makes him almost immune to the one thing that terrifies the average investor: volatility. He famously said things like, "Every dip is a gift," When the market panics and prices crash, he doesn't see a disaster. He sees a discount. He sees a chance to execute Pillar 2, buy more of the scarce asset at a lower price. And we see this in practice with MicroStrategy consistently buying during market downturns. This mindset is the psychological core of the entire blueprint. It's a commitment to the thesis, regardless of what the price does tomorrow. It's recognizing that any truly revolutionary technology will have gut wrenching volatility on its path to adoption. The people who win aren't the ones who time the market, but the ones who understand the long term story and have the conviction to hold on. Saylor has even taken this to its logical extreme, stating his intention to have the private keys to his personal Bitcoin holdings destroyed upon his death, calling it a gift to every other holder by making the asset even more scarce. This is the ultimate expression of a long-term belief, a time frame that extends beyond his own life. The third pillar of the Saylor Blueprint is to escape the tyranny of the short term. It's about finding assets and companies with a multi decade story and having the stomach to ride out the inevitable storms. It's about trading anxiety for conviction. Pillar 4, create a dominance moat. The final piece of the puzzle is about more than just owning an asset. It's about becoming intertwined with that asset's success. Through his relentless advocacy and his company's strategy, Michael Saylor has done more than just buy Bitcoin. He has made MicroStrategy synonymous with the institutional adoption of Bitcoin. When financial institutions or the media want to understand the corporate Bitcoin thesis, they don't look to a committee, they look to Michael Saylor. He has created an information and branding moat that's impossible for a competitor to copy. MicroStrategy has become, in effect, a leveraged play on Bitcoin's success, not just through its holdings, but through its very identity. This is a masterclass in building a modern competitive advantage. A moat isn't just about factories anymore. It's about mind share. It's about becoming the default gateway to a new and growing ecosystem. By being first, loudest, and most convicted, Saylor created a powerful feedback loop. The more Bitcoin succeeds, the more his brand grows, which in turn helps drive more adoption. The fourth pillar of the blueprint is to look for this kind of dominance. It's about finding the company that isn't just a player in a trend, but is the gravitational center of that trend. The one that becomes the category king and captures most of the value just by being the center of gravity for the whole industry. These four pillars, scarcity, leverage, long-term horizon, and dominance, form a complete philosophy. It's a blueprint for surviving the decay of the old financial system and positioning for the rise of the new. Now, let's take this powerful framework and apply it where it's never been applied before: the stock market. We're about to translate this entire philosophy into a concrete stock picking strategy, and the companies we identify might shock you. If you're getting value from this deep dive and want to learn how to apply first principles thinking to your own portfolio, take a second to hit that subscribe button. The financial world is changing faster than ever, and our mission here is to give you the frameworks you need to navigate it. All right, this is where we move from theory to action. We're going to take Saylor's four pillars and use them as a filter to scan the stock market. We're on the hunt for the corporate equivalents of his Bitcoin thesis, the Saylor superstocks that embody scarcity, leverage, long-term vision, and dominance. Application of Pillar 1. Scarcity is the ultimate moat. What does scarcity mean for a company? It's not about a limited number of shares. It's about having near monopolistic control over something that is absolutely critical and has no good substitute. This is the modern definition of an unbreakable moat. We're looking for companies that own a piece of the economic map that nobody else can touch. A perfect example is a company like ASML. You might not know their name, but they are arguably the single most important company in the world. ASML is the only company on Earth that can make extreme ultraviolet EUV lithography machines. These bus-sized, multi-hundred million dollar machines are the one tool required to produce the world's most advanced computer chips, the chips that power everything from your phone to the AI revolution. Every major chip maker, TSMC, Samsung, Intel, is completely dependent on ASML. There is no plan B. There is no alternative. This isn't just a strong market position. It's a global monopoly on a foundational technology built over decades of research. This is corporate scarcity. They aren't just selling a product, they're selling access to the future. Another form of scarcity is a proprietary network that gets more valuable as it grows. Think of Visa. Its scarcity lies in its nearly universal acceptance. With over 4.3 billion cards out there, its value isn't just its tech, but the social contract between millions of merchants and billions of people to use its system. For a competitor to challenge Visa, they'd have to painstakingly rebuild that global trust from scratch. That network effect creates a kind of scarcity that's incredibly hard to break. So the first filter for our blueprint is asking, does this company own something fundamentally scarce, a unique technology, a locked-in network, or a brand that commands non-negotiable mindshare? The first question isn't about the P/E ratio, it's is it scarce? Application of Pillar 2, leveraging strength for strategic annihilation. In the stock market, leveraging your asset isn't about taking on debt to buy Bitcoin. It's about a company using its core strength, be it a fortress balance sheet, massive free cash flow, or a dominant market position, as a weapon. This is what great capital allocation looks like. Mediocre companies just hoard cash or waste it on dumb acquisitions and poorly timed buybacks. But great companies, Saylor-esque companies, use their capital as a force multiplier. Consider Texas Instruments, TXN. For years, it was a solid, if boring, chip company. Then, management made a huge decision. They announced a massive spending plan, committing billions a year to build new, cutting-edge factories in the US. This wasn't just an upgrade, it was a strategic move to control their own supply chain and position themselves to capture decades of future growth. They are leveraging their financial strength today to secure their dominance for tomorrow. This is exactly the Saylor playbook, using the balance sheet to make a long-term strategic acquisition of a productive asset. An even more surgical example is Constellation Software, CSU.to. Their entire business model is Pillar 2. Constellation is a company that acquires small, boring, but essential software businesses. They use the steady cash flows from their portfolio of hundreds of companies to fund the acquisition of dozens more each year. They are a machine built to allocate capital. They take the yield from their existing assets and redeploy it with incredible discipline to acquire more cash flowing assets. It's a slow motion, compounding snowball of value. When applying this filter, look beyond the income statement. Study how management talks about and uses its cash. Are they using their strength to press their advantage? Are they making smart acquisitions? Are they investing aggressively to widen their moat? A company that has mastered leveraging its own strength can compound value at an extraordinary rate. Application of Pillar 3, the 10-year time horizon, and visionary leadership. This pillar is maybe the hardest for today's investor to embrace, but it's the most powerful. It means ignoring the noise, focusing on the signal, and finding companies led by founders or managers who aren't running the business for the next quarter, but for the next decade. These are the companies that will invest heavily in some unproven technology for years, taking losses and enduring skepticism because they have a clear vision of the future. The classic example is Amazon under Jeff Bezos. For years, Amazon was criticized for not making a profit, but Bezos was relentlessly reinvesting every dollar back into the business, building fulfillment centers, developing AWS, and expanding everywhere. He was playing a different game on a different time horizon, and the result was one of the most dominant companies in history. Today, you can see that same DNA in a company like Nvidia. Under founder CEO Jensen Huang, Nvidia has reinvented itself multiple times. It started with gaming cards, but Huang saw the potential for his chips far beyond gaming. The company invested over $1 billion to develop CUDA, its software platform that unlocked the GPU for general purpose computing. This was a massive long-term bet that took years to pay off. But it was this bet that positioned Nvidia to completely dominate the AI revolution. When the AI boom hit, everyone needed NVIDIA's chips, not just because the hardware was good, but because the entire ecosystem was built on CUDA. NVIDIA didn't just get lucky, they spent a decade building the future. To find these companies, you have to read shareholder letters, listen to conference calls. Ask yourself, is the CEO talking about financial engineering to hit a quarterly number? Or are they laying out a bold, multi-decade vision? Are they willing to be misunderstood now to win big later? Finding a company with true long-term leadership is like finding a map to a hidden gold mine. Application of Pillar 4, the digital dominance moat. In Saylor's world, MicroStrategy became the gateway for corporate Bitcoin. In the stock market, we're looking for companies that have built their own gravitational fields, ecosystems so powerful they become the default choice, creating a digital dominance moat. This is about more than just having a popular product. It's about creating a platform where the product, software, and services all lock together into a seamless experience that's a pain to leave. The undisputed king of this is Apple. You buy an iPhone, then an Apple Watch, which works perfectly with it, then AirPods. You subscribe to iCloud to back it all up. Your photos, messages, and data are all locked into the ecosystem. The cost of switching isn't just the price of a new phone, it's the pain of leaving your digital life behind. That is the ultimate dominance moat. We see a similar pattern with Microsoft. With its pivot to the cloud, it has used its decades of dominance in enterprise software to build Azure into a monster. It bundles its services, Office 365, Teams, Azure AI, into a package that's incredibly sticky and difficult for large companies to unwind. They aren't just selling software, they're selling the integrated operational backbone of a company. When looking for these companies, ask, is this a product or is it a world? Does the service get more valuable as more people use it? Does it get harder and more painful for customers to leave over time? Companies that achieve this don't just compete in the market, they are the market. They have pricing power, insane customer loyalty, and predictable revenue. They are the modern day empires. So, what is the Michael Saylor 10-year Bitcoin stock blueprint? It's not a list of hot stocks, it's a new way to think. It's a four-part filter for identifying the corporate titans of tomorrow. First, find scarcity. Look for the companies with a near monopoly on a critical technology, network, or brand. The ASMLs of the world. Second, identify intelligent leverage. Find the companies that are master capital allocators, using their strength not for defense, but for offense. The Constellation Softwares, the relentless compounding machines. Third, demand a long-term vision. Invest in leaders who are building for 2035, not for the next earnings call. The Nvidias who invent the future. And fourth, seek digital dominance. Find the companies building inescapable ecosystems that become the center of their industry, the Apples and Microsofts. We are entering a new financial era, one defined by the decay of old money and the rise of new technology. The old playbook of broad diversification may not be enough to protect your wealth, let alone grow it. The Saylor Blueprint offers a different path, a path of conviction, a path of concentrating on the highest quality, most unassailable businesses on the planet. It's a harder path. It requires more research, more patience, and more guts. But the lesson from Michael Saylor's multi-billion-dollar bet is clear. In a world of infinite paper, the future doesn't belong to the diversified, it belongs to the scarce. The only question is whether you have the courage to apply it.